Hello, good morning and welcome to this brand new edition of the newspaper show right here on ET Now. I'm Shell D'Souza and I'll take you through the top headlines that's there on the Economic Times as well as the Times of India. So let's get going with what are the top 10 headlines at in the morning paper of the Economic Times. First up is SEBI is perplexed by retail rush in equities. Moving on, you have banks need to step up lending. That's the word coming in from KV Kamath. Moving on, Reliance Industries is in talks with futures lenders for 30% haircut. Qualcomm to pick up Jio stake for 730 crore rupees. MNCs fear equalization levy on intergroup deals. Your Prime Minister Narendra Modi's virtual meet with Sundar Pichai to push FDI agenda. Buyers from United States as well as EU seeking discount. This FICCI Survey, which is saying that the negative GDP growth is likely in FY21. India's recovery rate improves to 62.93%. And BMC chief is saying no need for lockdown in Mumbai. So those are the top 10 headlines that's there in the Economic Times this morning for you. Let's move on to the top market headlines that's there in the newspaper. First up, rate cut as well as deposit growth to hurt banks in Q1. You have ICICI Bank as well as HDFC that has appointed bankers for fundraising. RBI bars yes IFSC Unit from taking FX deposits. China's FOSUN plans D-Street debut for gland pharma. And Rossari Biotech issue may ride on demand surge. So those are the market headlines. Let's shift focus now to the corporate headlines that's there in the newspaper. First up, it's TRAI blocks Vodafone Idea, Airtel's premium data plans. Oyo checks in still at 30% of pre-COVID level. The Leela to hire over 1,800 for 3 new hotels. AFL in talks to sell 2 brands to Reliance Retail. And Aviation Ministry refuses equity support to Air India. Alright, and those are the top headlines that's there on the Economic Times for you this morning. But first up, let me talk about the top headline that's there on the Economic Times. And here you go. This is an exclusive in the Economic Times, and that is the SEBI chief. SEBI is perplexed by surge in retail activity in equities. Market regulators not in favor for allowing companies to combine their first and the second quarter results. That's an exclusive coming in from SEBI chairman Ajay Tyagi. It said, but what else did he tell Economic Times in this exclusive interview? Let's go on to and get on board my colleague Poonam. Poonam, good morning. What else did the SEBI chairman have to say in this exclusive interview to Economic Times?
Oh yes, good morning, Sharon. In fact, yes, as you said, SEBI chairman Mr. Ajay Tyagi has already has raised concerns rather in terms of the surge in retail activity in the stock market, especially, Sharon, in time when most people have job losses and have suffered salary cuts. He has also mentioned in the interview that he's not in favor, or rather SEBI is not in favor of allowing companies to combine their first and second quarter results despite the economic disruptions, because if they do combine the results for the first and the second quarter, then companies will have time till mid of November to come up with the results, and that is fairly long period according to SEBI. He also mentioned that in absence of the declared results, investors, financial analysts, media would attempt to come up with their own guesses about the company performance, which may be less reliable, and in fact, it could also be slightly potentially speculative. In another query, he also mentioned that there was a query in terms of the investments by Chinese entities in the Indian stock markets, for which the decision of the beneficial ownership in the case of FPIs. Herein he said that investment by Chinese companies in the stock markets, he said regarding that, the decision of the beneficial ownership in case of FPIs lies within the ambit of the government and not SEBI. He also mentioned that there have been certain changes that have been there in FEMA relating to FDI from countries with which India shares borders. As far as FPIs are concerned, he said that while there have been discussions in which SEBI was involved, it is the responsibility, or it is for the government to take a view on the same. In another query, he also mentioned that findings of the probe into the Franklin Templeton mutual fund fiasco will be out by end of July, but he again declined to comment further on the issue. But as far as the retail investors are concerned, he did raise some concerns there in terms of the surge in activity, and he said that it would be not right to combine first and second quarter results.
All right, Poonam, thank you for joining us with that big exclusive interview that Economic Times has done. That is the SEBI chairman Ajay Tyagi and the important takeaways from that particular interview. But let me shift focus now on to two stories that's there on the Economic Times pertaining to Reliance Industries, and here are the two stories. There's more on this story on the other page. But to talk more on both the stories, I have my colleague Ajay. Ajay, first up, let's talk about Reliance Industries. They are in talk with the futures lenders for 30% haircut, and following that, we'll go on to another paycheck that Jio Platforms has finally gotten. So let's talk about first up with Reliance Industries in talks with futures lenders for 30% haircut. What is the story all about?
Well, that's correct. Sharon, if you look at this retail end of the business of Reliance Industries, they seem to be closing in to acquire various businesses of the future group, the debt-laden future group, where, by the way, in one of the businesses, Amazon also holds minority stake. But, the story over here is that the group could not service the debt and hence is being forced to, in a way, divest its interest. And the biggest retailer right now in town is Reliance Industries, which may have acquiring this may complement their own retail business. Now, when there is strategic fit between the two, now lenders will be more than happy. But Reliance Retail doesn't want to pay the lenders completely and is asking for some amount of relaxation in terms of repayment, and which may include 30% cut in the amount, plus much more relaxed repayment options spread over several years in order to finance it. So it may actually be, lenders may actually agree for it because they have a much more visibility in getting the principal back. So let's see how it goes. But it seems that this may be a necessary condition for the transaction to actually fructify.
All right, Ajay, hang in there. There's another story that's there, and that is the 12th investor that is coming in Jio Platforms. Another week, another check coming in for Jio Platforms. And who is this one?
Well, this is the global, telecom technology company Qualcomm, which has agreed to invest 783 crores in Jio Platforms. So Jio Platform continues to see interest from marquee investors globally. And clearly, the valuation again around 5 lakh crore enterprise value. The Jio Platform has emerged as a new tech leader, tech giant in our country. Not only are domain expert companies like Facebook, like Qualcomm, like Intel are wanting to pick up stake, but marquee investors, sovereign wealth funds are actually lined up. And this comes in interesting because this week Reliance AGM is also lined up on 15th. So it will be interesting to see what Mukesh Ambani actually talks about these big partnerships / investments which are pouring in. Because when you have shareholders like Qualcomm, technology giants like Facebook and Intel in your shareholder list, these are not just financial investors. They also bring along their domain expertise, and which will help Reliance to really forge ahead with Jio Platform into a major tech giant, not only in the country, perhaps in the region also in coming months and years.
All right, Ajay, thank you for taking us through the important stories pertaining to Reliance Industries. Qualcomm coming in as an investor in Jio platforms. That's the latest coming in on that particular front. Let's shift focus now on to page 7 of the Economic Times. And here you go. This is the story that my colleague Chandra is going to join in to talk about. And Oyo check-ins still at 30% of pre-COVID level. That's the word coming in from Oyo Hotels and Homes founder Ritesh Agrawal. I have my colleague Chandra who's joining in to give more details. Good morning, Chandra. Chandra, definitely the check-ins will be at a much lower level considering the way how the lockdowns are actually being reimposed and the unlock is still underway. What else does Oyo founder have to say to Economic Times in this report?
Hi, Cheryl. Good morning. So on the face of it, 30% pre-COVID occupancy levels might seem less. But if you look at what Oyo went through in the last few months because of the lockdown, then this is a green shoot according to its founder and CEO, Ritesh Agarwal. He said that there has been a significant jump in bookings in cities such as Ahmedabad, Delhi, Bengaluru, and other cities, so in absolute volume terms. So he says this is a positive development compared to the last few months of lockdown. So obviously things are not back to 100% occupancy, particularly with respect to hotels, and with the virus showing instances of recurring in some of their markets, it's going to be some way before they get back to full capacity. He's also spoken about the challenges in key international markets such as US, China and Europe. Remember, Oyo in the last few years has been betting heavily on US and China. So he spoke about the challenges in the US market, which has seen one of the largest spread of the virus. Now, Oyo in the last few months has undertaken a series of steps to cut costs. They announced layoffs of over 5,000 people a few months back to bring down their cost and number of employees. So he's spoken about how they are focusing on execution and how they will leverage technology to make their operations more efficient going forward. But at least some green shoot in the sense that they are seeing bookings go up compared to the previous phase.
All right, Chandra, thank you for taking us through that particular story that's there on the Economic Times. Now, let's shift focus to page 4 of Economic Times. And here you go on Prime Minister Narendra Modi's virtual meeting that is supposed to happen with Sundar Pichai of Google. Prime Minister Narendra Modi is set to virtually meet Google Chief Executive Sundar Pichai this week as India makes a push to attract foreign investment. The meeting is crucial for India's foreign investment pitch and comes within a few days of Prime Minister Narendra Modi inviting global companies to set up businesses in India. Sources have told Economic Times that Prime Minister might have virtual meetings with global leaders in the days and the weeks to come. As per a senior official who's spoken to Economic Times, is saying, and I quote, that India is a crucial market for tech companies. However, going forward, we would like to see a deeper engagement wherein tech majors increase their investments and presence in the country. So this is what the senior official told Economic Times. So this is a top headline that's coming in from Economic Times this morning. That is Prime Minister Narendra Modi is set to virtually meet Google Chief Executive Sundar Pichai this week. And also they're saying that he'll speak to some more global players, may have leaders in the days and the weeks to come. Now let me shift focus to another story that's there on page 4 of Economic Times. And there you go. And this is about the TRAI and the telecom space. Remember, you had some of the telecom operators come in with a premium plan for subscribers. And TRAI has blocked Vodafone Idea and Airtel's premium data plan. What is the rationale behind it? Like I mentioned, TRAI has blocked Bharti Airtel's Platinum and Vodafone Idea's Red X premium plans that offer faster data speed and priority service, saying that such schemes could lower the quality of mobile services for those who haven't opted for these particular plans. The decision actually drew a sharp impact on quality reaction from Vodafone Idea, with the senior official saying that the telecom company was surprised at the haste with which the authority acted. over the weekend without giving giving the company an opportunity to actually respond. Besides the impact on quality, TRAI official also said that the watchdog is evaluating whether the offers breach net neutrality rules, as the telecoms appear to be reserving a lane on the public data highway that uses public resources for exclusive use of the rich customers. This is what the TRAI official says. So for now, TRAI has actually blocked the premium plans coming in from Vodafone Idea as well as Airtel, saying that such schemes may lower service quality for those who haven't actually opted for these premium plans. So let's see how these two telecom majors actually react in trade today. All right, from telecom space back to page one, and let's talk about the banking space. And Economic Times has an exclusive interview with KV Kamath. It's right here on the front page of Economic Times. There you go. And what is exactly KV Kamath telling Economic Times? To talk more on that, I have my colleague Varun joining us this morning. Good morning, Varun. A big interview coming in for Economic Times from KV Kamath, and what are the important takeaways from there?
Right, Cheryl. Good morning. KV Kamath is a real veteran banker. He's the former president of the New Development Bank. He's also responsible for the massive turnaround that we've seen at ICICI Bank over the years. Now, what he basically is coming out and saying is that there's a lot of risk averseness in the system right now, and past misappropriation of such schemes that have been given out by the government and also huge NPA problems have scarred banks. And he believes that's what the reason is, that banks today are being so hesitant to lend to businesses that don't have good ratings as well as necessarily a strong balance sheet. So what he talks about is eliminating these fears and biases, and how at a time like this where we have numerous geopolitical tensions, whether it be India, China, we have financial tension, whether it be the fact that the country's been locked down for the 3 months, or whether it be the fact that the global economy has slowed down, now is not the time for banks to keep all their money in their pockets and essentially, leave the consumer behind. So that's what the central message of it is. And it also revolves around ratings agencies a little bit. So rating agencies are only giving AAA ratings to the strongest corporates, and then those corporates are the only ones who are able to attain funding. This is not really fair, and in a time like this, maybe investors, banks need to overlook the rating downgrade a little bit just to look at the inherent qualities of the business, as, they may turn around quickly when the situation is a lot better. So that's what KV Kamath had to say. And nonetheless, like you said, a very foremost veteran banker coming out and saying that it's time to step on the accelerator as far as lending is concerned.
All right, Varun, thank you for giving us a detailed analysis or detailed look into the KV Kamath's interview to Economic Times. But let's talk about another story that's there on Economic Times on page 6, and that is about ICICI Bank as well as HDFC. They've appointed bankers for fundraising. So who are the bankers and how much are both of them planning to raise?
Right, Cheryl. So the bankers that have been hired are Morgan Stanley, JP Morgan, iSecurities, and Kotak. So these are the lead bankers for both the ICICI issue and the HDFC issue. Now, the reason it's coming up in the newspaper this morning is that if you add up both the raises together, we're talking HDFC and ICICI banks, you're talking about 2 billion plus nearly another 2 billion. So you're looking at 29,000 crores. And this is one of the largest infusions of capital in the financial sector since the last global crisis. We've not seen this amount of money come into the system. Now, right now, we aren't even adding up Kotak. We aren't even adding up Axis. We aren't adding up a whole bunch of banks that still need to come with fundraisers. We're only talking about ICICI and HDFC, and still that's nearly 30,000 crores. So that's absolutely huge. These stake sale news have been coming in over the last month, and we've been doing lots of segments on it on the channel. So we know M&M doesn't matter. NBFC, bank, HFC, if you can raise money right now, you are. So it'll be interesting to see how much each marquee investor comes in for. Some of the other bankers also who are known to be possibly associated with these transactions are SBI Cap, a JM Financial, a Bank of America, and even an HSBC. So it's not just limited to the top tier JP Morgan and Morgan Stanley. It'll probably be QIP issue. It'll all be equity issues. These are not debt raises. They're not bond issues. They're equity issues. They're share sales. It's where the company parts with equity to raise money. So very key weeks coming up for all these banks, and it'll be really interesting to see what the total quantum raised is at the end of it all.
Thank you, Varun, for taking us through that particular story on ICICI Bank as well as HDFC. They've appointed bankers for their fundraising plan. Let's shift focus now and let's talk about another story that's there on the page 1 of Economic Times. And this is a story that I'm going to talk about, read directly off the newspapers. Buyers in the United States and the European Union are renegotiating contracts, citing the severe impact of COVID-19 pandemic on their businesses as they start placing orders with Indian suppliers ahead of Christmas. Coinciding with the 20 to 25% decline in orders, suppliers have been asked to provide up to 20% discount on prices across sectors, extending certain credit periods and reduce lead time to ensure that products reach before October when the demand is expected to pick up. So this is what is the story that's there on the Economic Times front page, that the buyers from United States and European Union are renegotiating their contracts and citing severe impact of COVID-19. Let's shift focus now to Economic Times page 4, and I'll get you a story from there, and that is on the Aviation Ministry and Air India. So you have the Aviation Ministry, which has actually refused equity support to Air India. So that's a big story that's coming in. Remember, Air India airline has been funding expenses from working capital debt and receipts of the government's payment for VVIP flights. The government has refused to provide equity infusion for Air India, and we all know that it is a cash-strapped airline. They are not going to endorse its request for fundraising, even if though they are on the block for that particular stake sale. Air India used to get some funds as part of equity support in the supplementary budget presented every year in September. Like earlier years, a request to fund losses also being incurred due to COVID-19 was made, but the Aviation Ministry rejected the request. That is the word coming in from senior government official to Economic Times. Now let's shift focus from the aviation space and let's talk about the banking space. And according to Economic Times, a sharp fall in lending rates due to aggressive benchmark rate cuts by RBI and faster deposit growth during the lockdown could lead to a 10 to 15 basis point contraction in bank margins. But to talk more, it will also impact the profitability in Q1 that is ended in June 2020. I believe we have my colleague Soumya joining in for more details on that. Soumya, what is this particular report talking about in the Economic Times? I believe we don't have Soumya with us joining us this morning, but yeah, this is what the story is about in the Economic Times, that the street fears are pressure on banks' margin, rate cut as well as deposit growth to hurt lenders' profitability. Let's shift focus now to another story that's there on the page 6 of Economic Times, and China's FOSUN Pharma is planning a D-Street debut for its Indian subsidiary Gland Pharma. To talk more on that, I'm joined by my colleague Pankaj. Good morning, Pankaj. Take us through this big story coming in. China's FOSUN Pharma is planning a D-Street debut for Indian subsidiary.
Of course, Gland Pharma is a company which has filed the DRHP. DRHP is, of course, the draft red herring prospectus, which is given so that, once the approval comes in, they can come out and go ahead and launch their share sale if they want to. Most of the cases, you tend to get draft red herring prospectus, which, just expires, and then you again have a refiling. But it shows very clearly that they intend to list this company, Gland Pharma. It's China's FOSUN Pharma, which is backing this company. And if all things go well, 5,000 crores is what essentially they would be looking to sell. It's a major domestic IPO for an Indian company with a Chinese parent. Of course, it's just a draft red herring prospectus which has been filed at this point of time. Bankers like Citi, Kotak, Nomura are people who are working on this, is what sources have indicated. And IPO market is slowly and steadily trying to pick up. Pharma stocks, of course, has been on the forefront of this rally, and maybe that's the reason why they want to encash on this rally at this point of time.
All right, Pankaj, thank you for taking us through that story that's there on the Economic Times. And with that, we are out of time with this edition of the Newspaper Show. Thank you for watching.